In this video, I'm going to be showing you guys exactly how I was able to turn $2,500 into over $18,000 with one option trade. I did the math and it's like a 625% profit, so not too bad. Also, the time frame in which this trade took place in order for like me to make as much money as I did was just over 2 months, and I'm going to tell you guys exactly how I did it. One of the reasons that I'm even making this video is because as I start to put out more options content, I figured it's probably not the worst idea to maybe give you guys a little bit of background of myself dabbling in options. I'm not just some person who can't walk the walk. No, I actually do walk the walk as well as talk the talk. So if you want to find out more about options and just all that fun stuff, feel free to stick around and subscribe. So the stock that I was able to do this on was Amazon, which is why the starting price of the option was fairly expensive at $2,575. Now, to some of you watching this video, you might not even have that much in your account, and that's fine. No worries. Amazon is an expensive stock and it subsequently has expensive options. But with a lot of money, you can make more money. That's just how the world works. Okay, so before I actually show you exactly what I did and why I did it, here's the proof. If you guys were questioning on if this was actually real, this was actually the last trade that I ever did with Amazon at the moment. You can see that I bought the 3,500 call with the January 15th of 2021 expiration back in June, on June 9th in 2020 for $2,575. And then I sold it on August 4th against the same strike price, same expiration date. This was just a canceled sell. I tried to sell it and I just canceled it. So that's why this is here. And you can see that I sold that contract for $18,675, literally 2 months and 5 days later. So I'm just going to basically break down what I saw, why I did it, and why I got out. So June 9th, that's a pretty key date, and that's important. So if we scroll up, as I just did right now, we are looking at the 5-year chart of Amazon. Now, why the 5-year chart? Well, because it's very important to tell you guys why I got in when I did. So if we look over here, we can see that like June 9th is right. It says June 5th, but because it goes by weeks. So this is essentially where I got in, as you can see right up here. Why did I do that? Well, we're looking at the 5-year chart. And as you can see, for basically beginning of 2018 all the way till basically June of 2020, we were trading in a horizontal range. We were not making new highs. We were just chilling, just kind of nothing going on. I would attribute a little bit of my trade to luck because I just happened to be looking at Amazon in this range of, when it was making new highs. And that is basically the sole reason why I bought this contract. I don't know how the heck it was so cheap. I really don't. Granted, it was $1,000 out of the money, but like if you look at any of these options right now on Amazon, it's very rare that you find them that cheap. So I did get a little bit lucky in terms of the entry point. Again, the entire reason that I bought that option was because it broke out to new highs. And typically, when stocks break out of new highs, they typically run. So that's basically what I was betting on. Did I expect this trade to do what it did? Not even close. When I put that trade on, I was going to be thrilled if I doubled my money. I was going to be ecstatic if it ended up going to $5,000. Probably because of my history with Amazon. I was very skeptical. If you guys don't know what I'm talking about, that video I will link up here. My biggest 5-figure loss thanks to Amazon, but I ended up making it back, so I guess we're even. So if we zoom in on the 1-year chart, you can see more specifically right around here, June 9th, the stock was trading for roughly $2,600. And again, my strike price was the $3,500, so $900 below that or above that, which was why the contract was as cheap as it was. And so if we continue to fast forward, we can see that this stock is basically just going straight up all the way into mid-July. And then we kind of just relax in July because it's the summer and nobody does anything anyway. And then we get to the beginning of August, and at this point, I'm up. I'm up significantly. Believe it or not, I was actually up a ton more than where I sold it for at $18,000. If I remember correctly, I think it was at this point right here when it hit, when it's after like basically, what is this, June 29th? Pretty much 2 straight weeks of going in a vertical line. If I remember correctly, and this is the time frame matches up, on this morning, this should be this date, July 9th, should be a Monday morning. And I remember because I was driving to go play golf with my dad and my brother, and the markets had just opened. It was probably like 10 o'clock. And I look at my phone, and this option contract is worth $30,000. I put $2,500 in, and it's now saying it's worth $30,000. Sure, obviously, hindsight, yes, get out of there right now, take your money and go. But in my head, the reason why I didn't, because I'm like, it's the beginning of July and I still have basically 6 months until this thing expires. Which in all reality, which means I would look to get rid of it in about 3 months. So I'm like, let's just see where this thing goes. Let's see how high it can go. Can it go to 60? So yeah, obviously hindsight, I would have sold it there, but nobody ever calls the tops and nobody ever buys the bottoms. That's just how it works. So then it goes down a little bit. It comes back up in mid-July, goes back down, and then it starts to rally a little bit again in August. Now, the reason that I sold, specifically that I sold here, was because it started to look like a Head and Shoulders. For those of you that don't really know what that means, Head and Shoulders is basically just like three peaks, and typically that's a bad sign. I mean, yeah, it didn't end up going down significantly. It did end up making a run a little bit. I did check it, I think, in September because obviously I was just curious. And I think it was only worth around $24,000. So it didn't end up going back up to those 30 grand numbers again. And as you can see, it has been trading horizontal ever since. So there is a ton of money to be made in the options market. You just have to have a little bit of luck. You got to be able to time the market a little bit. And then most importantly, especially when stuff like this happens, you need to probably have an exit strategy. I didn't have an exit strategy strictly because it was $2,500. It wasn't even supposed to do this. So telling me that like in 2 months from now that the $2,500 investment would be worth $30,000, that doesn't make any sense. So that is a strategy that I like to do strictly because by buying an expiration date that is far enough out in advance where time decay is not going to eat it up, it gives my prediction time to work. Yes, did I get lucky that as soon as I bought the option contract, the stock pretty much never looked back? Yes, obviously that is the ideal situation. You would love for that to happen. You never want to put on a trade and then it instantly just goes down because that's not fun. It's always much better when the stock just immediately continues to go up, so you don't have to worry about being negative. But this is a trade that I like to do. You could consider this a leap call option. I probably wouldn't. I do have a couple leap call options on at the moment for other stocks such as Adobe. And I actually just got out of a Tesla trade because it started to go down a little bit too much. I still made a profit, but I think I'm just hoping for a better entry. So I will keep my eyes focused on that. But yeah, if you guys like this video, if you want more options content in the future, you want to learn about options, trades that I've been making, feel free to subscribe. Let me know down in the comments. And as always, I will see you guys next video.